Good morning, students. Now we'll see the valuation of share. The case of shares quoted in the recognized stock exchange, the price quoted in the stock exchange are generally taken as the basis of the valuation of the share. The stock exchange prices are determined generally on the demand supply position of the share and on business cycle. The London Stock Exchange opinions that the stock exchange may be linked to the scientific recording instrument which registered not in its own action and option but the actions and options of private institutional investors all over the country. The value of the shares of the company depends on so many factors such as nature of business, economic policies of the government, demand and supply of share, rate of dividend paid, yield of other related shares in the stock exchange, net worth of the company, earning capacity, quoted price of the shares in the stock market, profit made over a number of years, dividend paid on the shares over a number of years, prospect of growth, enhanced earnings per share. The need and purpose of the valuation shares are it will be useful in the following circumstances like assessment of wealth tax, estate duty, gift tax, amalgamation and absorption, for converting one class of shares to the another class, advancing loans on the security of shares, compensating the shareholders of acquisition of share by the government under a scheme, acquisition of interest of dissenting shareholder under the reconstructions. So the factors influencing valuation of the shares are current stock market price, profit earned and dividend paid over the year, availability of reserves and future profit, realizable value of the net asset, current and deferred liability, age and status of the plant and machinery, net worth of the company, record of efficiency, integrity and honesty of the board of directors. Who should pay the indirect taxes? Open market price, stock exchange quotation, net asset basis, earning per share, yield or return, net worth method, breakup value. These are the shares certain methods have come to be recognized for the valuation of share. The instruction value method is the asset banking method, real value method, balance sheet method or breakup value method. Under this method, the net asset of the company including goodwill and non-trading assets are divided by the number of shares issued to arrive the value of each share. If the market value of the asset is available, the same is to be considered, and in the absence of such information, the book value of the asset shall be taken as the market value. The liability payable to the third party and the preference shareholder is to be deducted from the total asset to arrive the net asset. From the information given below, the balance sheet of Ciplam Limited on 31st December, the question is, this is the question. So the solution is net asset availability to the equity shareholder divided by the number of equity share. So the net assets availability of equity shareholders are 13,30,000. That is the value of equity shares are building, furniture, stock, investment, debtors, bank, total assets. We have to list the creditors and the net asset is and then preference share finally 13,30,000. So the value of equity share is 13,30,000 divided by number of equity share is 4,000. So totally 332.5 the instructive value of each equity share. Yield method. The value of shares under the yield method may be done under two categories. Return on capital employed method. So the formula is normal rate of return into paid up value of shares. So the first method is return on capital employed and the second is the valuation of the basic dividend. This method is more suitable for the valuation of small block of shares. The normal rate of return, the following particulars are available in the respect of Goodwill Limited. So these are the capitals and the preference shares. Now we'll calculate the intrinsic value per equity share and the value per equity share. So this is the formula is net asset available equity shareholders divided by number of equity share. So total the net asset availability is 48,150, and then the number of equity share is 4,500. So the yield basis is 10.70. Average profit after tax is 8,500. Transfer to general reserve is 850. So less preferential dividend 6% of 45,000 is 2,700. Profit available to equity shareholders is 4,950. The rate of dividend is 4,950 divided by 45,000 into 10 is 11%. The value of equity share is rate of dividend divided by the normal rate into paid up value of share. That is 12.22. Thank you.